The U.S. economy grew at the fastest pace since 2003, fueled in part by increased spending by consumers and businesses. Analysts say it's not a blip, but a sign of things to come. Commonwealth Financial Network's Brad McMillan spoke to VOA on Skype.
This is the fastest growth rate we've seen in, I believe, 11 years. And this says that we're actually getting very close. I wouldn't say to a boom, but we have a sustainable recovery, and it's accelerating.
For financial markets, it was an early holiday present that helped lift the Dow Industrial Average above 18,000 for the first time. Gross domestic product, the sum of all goods and services produced in the country, is the broadest measure of economic health. And in a country as consumer-driven as the United States, Barclays Capital chief economist Michael Gapin says it means it's time for businesses to catch up.
2/3 of the U.S. economy is related to consumption, and history would suggest that business investment lags consumption or lags economic growth. So if the overall economy is starting to accelerate, then 2015 could also be a fairly strong business investment climate.
But external factors could still have an impact on the U.S. economy. Among them, reduced revenue in oil-producing countries and slower growth in others, according to Bankrate.com analyst Claes Bell, also via Skype.
I would say that there are some kind of modest headwinds on the economy. A lot of our trading partners are seeing their economic growth slow a lot, so our export growth may not be what it was earlier this year.
Faster U.S. growth could also lead to higher prices. That means higher inflation, says Commonwealth Financial's Brad McMillan.
First of all, wage growth is going to accelerate, and in fact, we're already seeing that. Second of all, owner equivalent rent, the cost of housing, is a very large part of the inflation index, and that's actually rising faster than people realize.
U.S. inflation has been well below the U.S. Central Bank's target rate of 2%. But some say better than expected growth and increased consumer spending could prompt the central bank to raise interest rates sooner than the mid-2015 timeframe predicted by many economists. Mil Arcega, VOA News, Washington.